Good morning all and welcome to today's video. So today I have just the one pair on watch. The market across the board still looking like it needs more development, so I'm going to let my other pairs, the pairs that are in my top 6 and my additional pairs, I'm going to let them develop, do what they need to do, and then reconvene with those pairs as and when the entries manifest and present themselves. So euro dollar, why am I looking at this on the higher time frames? So we do top-down analysis. Those of us who trade the Falcon strategy and those of us who trade with the intention of making money for over the long term and for the sustainable future. And what I see about this pair, the higher time frame narrative as I see it, is that we have this kind of 1, 2, 3 touch structure there. We have this structure here. We have a 1, 2, 3. We have this 1, 2, 3 middle section, which taps into, according to my data at least, the last exchange of liquidity which price rallied from. Okay, so this is the last exchange of liquidity. If we just scroll left, you can see there's a little dinosaur there. That's how long ago it was. We tapped into that area by way of this 1, 2, 3 structure, which has a 1, 2, 3 middle section, giving me a clue that this is a completed piece of structure and that we will likely therefore rally from this area here. Okay, and we did. You can see we rallied to the upside. So there is no reason at this moment in time for price to come all the way down to these lows, because this is a completed piece of structure. So we know that on the higher time frames, the market on time frames in general, the market moves by way of impulse correction continuations. Okay, that's the natural ebb and flow of the market. You can see that what we had previously, if you remember, if you've been watching my previous videos, you can see that we had this 1, 2, 3. Okay, with this 1, 2, 3 wave in it like that. Let me just do that again. So we had this 1, 2, 3 touch structure there. This is how we had our trend lines plotted to start with. We tapped into this exchange of liquidity here, and then we pushed down. Okay, we tapped into what we call the 90% rule. So the start of this piece of structure. Okay, so this is euro dollar moves is very reliable when it comes to structure. Okay, so then we tapped into this area here. Notice we had the near miss. I talked about that when I was looking at this 1, 2, 3 touch structure. I think I referenced how this had near missed this area here. So these are what I like to call the FOMO channel. So when we get close to an area of value and we sell off, so close to an area of value such as this and we sell off, usually this is just a bit of a FOMO leg before we come up, break the highs and then push down. Okay, well, you can see that FOMO leg here. Okay, so we have this low here, this liquidity point. Price comes down, we near miss to this area, and then we move up in a fairly corrective manner. Price comes down, and then eventually we tap into the area that we near miss to, and then we start to rally to the upside. Okay, so I'm just seeing this now. So what we do, those of us who trade the Falcon strategy, is we evolve our trend lines, if we're using trend lines, to encompass the most recent 2 touches. So because we've tapped into this area now, and there's no reason for price to come all the way back down to this low, because it's already tapped into this area where the bigger players would likely have been getting in for the long positions. I'm seeing this, I've evolved my trend lines to encompass the most recent 2 touches. So now I'm seeing this as an impulse correction continuation to tap into this area here, okay, which we not so much near missed, but we got quite close to last time around and failed to tap into. Okay, so that's what I'm seeing now. I'm seeing this as an expanding patterns where the trend lines are diverging apart. Okay, and I'm just seeing this as an impulse correction continuation to push higher. We've cleared. Okay, we've cleared all of this now. We broke out of all this consolidation and we've well and truly rocketed to the upside. And you can see that we may be forming another expanding pattern to push higher. Okay, so if we just measure where the impulse started, so from here to the top of the correction, and we assume that the continuation leg out is of a similar length, that would take us up into these regions. And of course, because the volume that's been built up within a correction can often dictate how high price breaks above the consolidation. If we were to break out of that, that could take us up into these regions, and we could be well on our way to this high here, which I've referenced, which I have my path tool pointing towards. Okay, so as we drill down, you can see that we're coming back down into this area of value. Price leaves a footprint. Okay, you can see the footprint here that the price left, and you can see that price is coming back down by way of this expanding pattern for potentially a move to the upside. If we just drill down a little bit further, you can see we have this structure here. It might be easier if I just show you this on the 1 hour chart. We have a completed piece of structure here. Okay, so we have this expanding pattern. Euro dollar is giving us a lot of expanding patterns at the moment. You can see we have this 1, 2, 3. We have this first touch, second touch where we have a 1, 2, 3 middle section. We tap into this area. Price moves down by way of a 1, 2, 3, giving me a clue that this is a completed move. We tap into this low here, wash out the liquidity that was sat there, and then price moves to the upside and breaks out of this structure. So there's no reason at this moment in time for price to come all the way back down to here. So this, therefore, is likely the area of value which price will snap back to like a magnet. And you can see that once again we have that kind of impulse, correction, continuation. And what I'm trying to do is pay more attention to, typically speaking, making sure that sometimes these impulsive legs can be a bit corrective. But one thing I'm trying to do is make sure that they're not more corrective than the actual corrective leg, if that makes sense. So when we have an impulse, correction, continuation, I'm trying to ensure that the impulses are not more corrective, and preferably not as corrective as the corrective legs, if that makes sense, because typically from the testing I've done from the pattern separation, they tend to be less reliable when that is the case. So because we have two legs here, an impulse and a continuation, which are more impulsive than this corrective leg up, that gives me a clue that this is potentially a reliable piece of structure and that we may snap back to this area before rallying to the upside. Okay, so what I'll be looking for today is the following. If I just get rid of this paintbrush tool thing there. Okay, so what I'm looking for today, and this may not be ready by the end of the day because obviously we are some distance from this area at this moment in time, but as you can see from this move here, it only takes 2 bearish candles, so 2 1 hour bearish candles, and we could potentially be down in this area here. Okay, and if that happens, there is a little bit of economic data, I believe, coming out of the United States today, which may act as the catalyst to take price down to the area of value. And because of obviously this has been quite an impulsive move, my rules state, my trading plan states that if we reach my area of value impulsively, then I wait for a push up followed by a subsequent correction, which would be this. If we tapped into the area, pushed up, and we got a little consolidation, that would likely be the banks and the bigger players stacking their orders for the next leg to the upside. And if they did that, then I would be looking to get long on the break of a correction such as this, and or within it. I would look for either a reduced risk entry on the break or a risk entry within it, minimum 10 pips stop loss. Okay. And then I would be able to manage this up to this first inflection point there for something in the region of 12%, depending on where the flag forms, if it forms at all, and how big the flag is. So that is what I will be looking for today. I'm going to try and keep these videos a little bit more short and concise. And of course, if the higher time frame target taps in and we tap into this areas, then obviously there's a lot of profit potential to be made to the upside. It's unlikely that we would catch that all in one go, but that's not the aim of the game. The aim of the game is to be in trading and in alignment with the money flow, and then managing our risk, locking in profit where we can. And then if we get tagged out and we have to get in again, that so be it. We look for another entry, which is also in alignment with that higher time frame direction. So that is my forecast today. That is what will be looking for. I have an alert set just above the area of value there, as you can see there. If it does not trigger, then I will not be looking to place a trade. Have a great day, one and all. Have a great weekend, and I will see you again next week with another one of these videos. Thanks for watching.